The question we've been asking is, what does it mean if small business failure rates return to their historic averages? We believe that there's this backlog in small business failures that is likely going to come home to roost and kind of start catching up and return to that mean. People ask, well, what do you mean by that? Well, if we look at history, 1985 to 2010, the average small business failure rate was about 9% a year. When you look at 2010 through 2024, due to low interest rates, free money through COVID and some stimulus programs, small business failure rate fell to about 7.5% to 8%. So we have about 1.5% to 1% of backlog of small business failure of businesses that probably should have failed during that time, but due to those low interest rates and free money, they didn't. So what happens when they start reverting to that mean and we have to get back to a 9% average? Well, that means we have to have a lot more small business failure rate. This is further emphasized by the fact that business bankruptcies were at an all-time low the last few years, which just further goes to prove that we have this backlog in the system. Due to ERC money, PPP money, EIDL, COVID loans, those pieces, which that money is mostly used up now. And we're looking at some additional economic headwinds at times, of tariffs and some other pieces that are going to stack against these businesses that maybe aren't fundamentally sound, but were able to survive due to low interest rate environment we were in. But we're looking longer term and saying at some point we're likely to return to that mean as the business environment changes. Interest rates are now higher, right? The free stimulus money looks like it's not coming back. We may have some economic headwinds from general market conditions. Due to that, we're just saying, hey, let's make sure that these businesses are in a really solid place. That way that they are viable going forward and can continue to thrive.